Good afternoon, ladies and gentlemen, on the inside and the outside of the trading community. Hope you're doing well today, team. It is Monday, the 2nd of March of this year. Good afternoon to you, H&C. Good to see you, mates. We got Matthew and Braden in the house as well. Good evening to you, chaps. Hope you're doing well. So, how are we doing? Hope there was a good weekend to go around. I had a pretty good weekend. It was a bit cold and wet and miserable as it has been for a long time now in England, but it was all right nevertheless. I had the kids, and yeah, we went out mountain biking, which was good. Got absolutely soaked, which wasn't so great, but it was all right. It was all right. Today, however, obviously back to work, back in the office, and the sun is absolutely shining. It's shining a beast out there, which is a little bit of a shame. Been a busy start to the week for me personally as well. Got lots of stuff going on behind the scenes. Obviously, in the run-up to Wednesday morning's new equities specialist session as well, which I'm personally super hyped for at the moment. Really looking forward to that. For those of you who won't be able to make that on a Wednesday morning, don't worry, rest assured it will be saved and available for you guys to get on catch up. But yeah, there's some exciting things happening in the pipeline with that one, and you will be able to literally what I hope at least after the fact is after it's done is you will be able to access that and utilize it as a training course. I don't want to say it's going to be like the actual CFD training course that I've already done. In a sense that is, it's very structured, very pre-recorded. It is going to have a little bit more of that real-time flow, in essence, that we kind of get, from the live sessions, of course. But it is going to be absolutely stuffed to the brim with actionable content that you guys can, really get your teeth stuck into, and hopefully, with my aim is for you guys to go ahead and use it, and sort of try and secure a little bit more of a financial freedom for yourselves, years down the line. Not just sort of be reactionary in our CFD markets and on the day-to-day basis, but also have a pot that's growing for you all down the line. I think in this day and age, it's more important than ever as we see an increase in the wealth divide. So yeah, I've got good strong reasoning behind me wanting to do it and to be able to get that out to you. And yeah, I'm really looking forward to it. So anyway, let's push on then. So we've got the market analysis report up and running in front of us. We've got a couple of trade ideas this week which are looking pretty good. The Euro CAD. I actually had an issue this morning, by the way, with my 15-minute time frames. And whenever I scaled down to a 15-minute chart, it would be pre-weekend close. So I didn't realize this at the time either. So all of my 15-minute charts on any asset that I was looking at, the last candle they showed me was on Friday, the Friday close. All the daily ones worked absolutely fine. But as you will see here from the Euro CAD, I was analyzing the EC, thought it was a really nice trade idea, beautiful little range that I found it in as well. And by the time the chart actually loaded up after the fact, the damn thing was actually trading sub 163 in down at the lows here, trading now at 160.04. So yeah, a little bit of a weird situation there, and I do appreciate that. Obviously, the market report's kind of now a little bit, I don't want to say tainted, but the trading opportunity in our FX market has been sort of dumped. So I am going to endeavor to get out another 15-minute trade idea for this week, or not necessarily a 15-minute trade idea, but another FX specific idea for everybody, which is a little bit of a shame. You had the same thing, did you? Yeah, it was a weird one. God, all the years we've been using TradingView now, it's done some funny things over the years, but I don't remember that one in particular. I think that's a new one. But anyway, it did end up catching up. Nevertheless, saw Euro CAD trading down at the lows there. It's already broken free of the damn range, so we can't trade that one now. But anyway, the S&P 500. So it's trading down into liquidity. It has had a bounce so far, but tensions are firing on all cylinders. The US has openly now, taken military action and wants to pursue further and additional military action against Iran. We've got a lot of other nations in the vicinity wanting to get in on the action as well. And this could, and it may really, blow up completely. We may see things spiral completely out of control over the next, I don't know what we would say in terms of a time frame, maybe 6 months, 6 to 12 months. It could be insane. It really could. But the US stock markets are in a really precarious position at the moment. As a result of this, we've seen pretty big down days all weekend. We've got US 30 down, NAS 100, S&P. They're all down about 1% so far. The US 30 down, S&P have recovered somewhat, which is now why they're showing it a minus 0.88 and minus 0.82 respectively at the time of recording this session. So they are all weakening off. But I think this continues. As predicted. I hate that word, but let's say forecasted or projected or whatever it is. As mentioned last week, we have the DXY also trading above liquidity now, where dollar is in incredible demand because all of the world's military entities are now using the dollar to purchase military assets. So huge demand in the US dollar. And I think that continues as well. So probably see a bit of a continuation to the downside in our US stocks. Demand coming back into the US dollar. Some of those US dollar FX instruments, shorting the euro USD, from the highs at the moment. The USD yen as well might be a really nice buying opportunity. There's definitely some fundamental plays that we need to consider at this very turbulent time between the US and its enemies, I suppose you would say at this stage. It's a shame that it's the way it is, but that is the way it is, and we just have to do our jobs regardless. Good afternoon to you, D. Good to see you, buddy. So that's my thoughts on the US markets at the moment. Also, we have to consider our energy markets. We've had incredible growth over the weekend in energy. UK Brent, US crude absolutely firing up. The great thing is as well of natural gas hasn't actually popped yet. So we've still got ample opportunity to buy the breaker structure after the dip and then run it back up to the next previous point of liquidity, which I've already outlined for you in the chart. It's a really nice risk reward ratio on that one. We could easily see a 1 to 4 to a 1 to 5 return on that. So that's really decent as well. And then finally, guys, in terms of our precious metals this week, we are again looking at gold. We still have the gold long open from last week, and so far, so good. As you can imagine, you have war times, increased uncertainty. The only reason gold is rallying with the dollar at the moment, obviously gold is going to be the backup for the safe haven investors, people who are worried about the state of the US. So there's still a great fundamental need for gold to be bid. But at the same time, of course, you've got the dollar, which is also being bid because of the military assets. It's a bit of a funny mix. But if you think back over the last, let's say, 700 days, right, the last couple of years, we've seen this happen a lot. It doesn't usually last consistently, but over a great period of time, we see this happen a lot where gold and the US dollar have been rallying together side by side. We've also seen this relationship with other trading assets as well, such as the US stock market and gold, which have also rallied side by side. And this all historically would have been unlikely. It would have been a bit of an unorthodox sort of market situation. So I do think that's going to be taking place again. And so far, I mean, we're doing really well. I think it's a 1 to 3 or 1 to 3.5 that we've got running, a little bit of a longer term swing play in gold at the moment, and it's going nicely. So we should all be pretty chuffed with that one. So moving down into the market challenges, as everybody is very well aware, it is NFP week this week for the US. Now, of course, we don't believe there is. We never really know ahead of time if it's going to be, but temporary government shutdown, it is still in the background. It is still a little bit of a risk. But nevertheless, non-farm payrolls are at this stage all moving ahead. All the US employment data is, and it's looking like a pretty good show. We've got the NFP registering as a 7 out of 10, and we've got US unemployment and the average hourly earnings at a 5 and a 6 respectively. So it should be a pretty nice mixed bag on Friday afternoon. The downside to this is the fact that the only other notable call out in terms of the fundamental economic data releases this week is the European CPI. That's the only other one, which generally what that means in layman's terms, in what matters to you when you're sort of on the ground in the markets, is you may see a very, very quiet week up until that point because the markets are relatively stationary into the economic event. The thing that I think is going to throw a little bit of something into the mix here is the fact that day to day, we are seeing more and more and more and more headlines about the US and its military action and what it wants to do next. And I think that is going to drive asset values, either or whichever way they're going to go, Monday through Thursday. It's going to be a turbulent time. It really is. And I think in between it not being a turbulent time, it's going to be a slow time. So make no mistake, we're going to have to be on our toes. We really, really are. There's going to be times where the volatility comes through thick and fast, and we're going to have to be very, very reactive, and we're going to have to be quick on the trigger. But we're going to have to follow our rules relentlessly, be a slave to the rules, and be very well organized. That is the kind of theme for this week. Now, moving down into the SSV, we again don't really have any other major notable call-outs here, apart from natural gas, which was 48, I believe, last week, and has actually risen 4%. It's also worth mentioning gold, which actually had a 3.6% move up as well in terms of longs versus shorts. So there is definitely some more buying power coming into both of these assets, which is good considering our bias. Now, let's go down into the economic and order book impact report. So again, we've got the news events here. The average hourly earnings is actually registering as a 5, unemployment a 6, but the NFP is an 8 out of 10 against the broader market impact this week. And that is the biggest thing that we are looking at. So an 8 out of 10 is pretty big. That is anticipating a pretty hefty move. We all know what the NFP can be like. I wouldn't just purely be putting my money on the volatility side of things just based on the EIS here. So we'll have to take that with a pinch of salt. Personally, I will be. Now, moving on down into the commercial, non-commercial data, not really anything major to call out here. Indices are bid at the moment, but I don't think, I don't think we should look too far into the indicators this week. Really, as a direct result, guys, of the fact of the US in what they're up to at the moment, I think we have to be really eyes wide open in this situation, and not really follow the general sort of buy side versus sell side liquidity information. We can certainly utilize that as part of a wider bias, but I wouldn't be relying on that as heavily as I sometimes do, I suppose. Now, moving down into equities, we've got ATI, for WFRD, and IOVA this week, all registered as interest. The major one this week is Celestica, and it's an AI infrastructure hyperscaler. So please have a look at that. It is really interesting, and it's dirt cheap in the grand scheme of things as well. Again, you're probably looking at maybe, I don't know, anywhere from a 4-week to a 12-week hold. You might see, I don't know, possibly 7 to 8% net off the back of it. So it's certainly looking pretty good at the moment. We can dig into this on a more regular basis. And of course, now that we've got specific equity sessions up in the pipeline, we'll be able to dig into these even further soon enough. And then finally, team, we have the institutional buying interest by sector. We've had $2.4 billion over the weekend in AI infrastructure. We had a $2.3 billion inflow in data centers, which is, again, directly relevant to artificial intelligence, of course. Industrials to 1.5, and then we have energy. That's actually energy infrastructure, not just energy in general, like natural gas, oil markets, and stuff like that. That's actually infrastructure for it. Frankly, I couldn't actually fit that on the edge of the screen. All right. So the best part of the whole entire report, the disclaimer. And so the information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Trading in the financial markets involves significant risk and may not be suitable for all investors. Please feel free to check out the full disclaimer on the market report or head over to our website, www.theutc.com, and then go and check out our T's and C's there as well. Okay. Thank you, everyone. So let's move on over to the charts then, have a good look at what's been going on in our US indices today and create a plan of attack for them, especially with everything that's been going on otherwise. So let's move on up here. Hopefully my charts are coming through loud and clear over the stream. It looks like they are. Rightio. So as I mentioned at the beginning of the session today, team, we've got the US 30 Dow, NAS 100, S&P 500. They are all currently down. I repeat, all down today. We are having a big down day as a result of the news that came out over the weekend and the fact that we've got a lot of very worried people. The US 30 Dow Jones is actually and technically broken through the major inflection point on the daily time frame. That is this one here. Things do get a little bit awkward around this area in here, of course, because it kind of whipsaws. We have a bit of a daily pennant, which is formed in that area. But make no mistake, if the market gets a close down here, we've got a real nice path of least resistance, and I'd be looking at least at around 47k for the run down there. Now, of course, today's trading, we're not going to be looking at that in just one go, but this is more of a weekly heads up bit of analysis. The NAS 100 has not made any significant progress to the downside. Yes, we have opened up weak. Yes, it has been trading lower throughout the trading session today, but the major point to be concerned about with the NAS 100 is there, and which is still a sizable gap away from where we're trading at the moment. This is the 24 magnet. We get a break and close under maybe 23.75. We've got a POLR down to 23, the next major magnet, and thereafter down to 22.28, which is the next major inflection point thereafter. So it's definitely got some work to do here at the moment. Now, let's just go back up here and start to think about intraday trading it today. Big liquidity underneath price at the moment. We've got a nice gap. Gap's not been filled. We've also got a, let me just mark this out for everybody. We've got that one there, and we've got this one coming down here. We get the big gap down. So my train of thought is that we could probably see the run back up to around 48.86 today. We have a TRF. The TRF is at the point of inflection, which is this area in here. We see the big commercial knee-jerk reaction that we like to see. If I draw liquidity across to the right-hand side, this is the major TRF between where we're trading at the moment and our designated target, which is a little bit problematic. It's not the end of the world, though. So what I would be looking at today is a break of structure trade through this area in here. And this is quite a sizable move for a Monday, but I think the market might have what it takes to get it done. So we've got that there being the TP. We've got this is the TRF, but we have an entry opportunity there at around 48.57. We then bring our stop loss all the way up. Have that as a nice margin about, I mean, that's yielding a 1 to 4.2. So that's a little bit too insane for me. So I'd have that stop loss and bring that down to around a 1 to 2.8. And that encompasses quite a few points of interest inside the stop loss there that can protect us from the market taking a bit of a turn on us. But that would be the long. As far as a short is concerned today, I will not be trading the Dow Jones short. We'll have to utilize one of our other US trading assets for that one. So the US 30 Dow Jones long, entry, target, stop loss, looking to fill the gap. Now, in terms of the NAS 100 today, team, as we know, we don't have any major daily liquidity below price, not until all the way back down at 24. We have inflection at this area in here, which actually coincides, let's say, with the previous low that we've got in there. That is a tiny bit of a shame, I would say. The margins aren't huge on this one, but we do have this low, which I absolutely love. We came down to this low. This is the weekend open, so the Sunday open. We come right back up here, initial buying power, but the market does want to go short. So if I drag my zone across from the low there, right the way across, it yields that level there as a break of structure point. Now, we have had this area, and this area come down. So what we're going to do is I'm going to grab one of these and I'm going to stick that in there. And then the trade idea itself is going to take place below here with a target profit down at the lows there, previous low. And the stop loss is going to be nicely tucked in behind the zone up there. and that's going to yield us all a nice 1 to 2.66. Your net return on that one's probably closer to a 1 to 2.4, I would say, just based on spread variations. So that would be the NAS. And look, to be honest with you, I'm not really interested in buying the NAS today. And that's good for us because it means that we have dedicated long in the US 30 Dow Jones and a dedicated short in the US tech stocks. What it also means is that we can probably get the S&P 500 in the action as well. So if we look at the S&P, we've already got a really nice inflection point here. Drag that across. That's the rebound point there. Perfect area for a trading opportunity. So we get the entry. We have the target profit at the previous lows. We have the stop loss tucked in behind the point of liquidity above. I mean, you might be able to wing a 1 to 3 on that one. I'm probably going to just have it just a cusp underneath it, around a 1 to 2.9 or so. And that would be the opportunity in the S&P this afternoon. Now, I think obviously there's a reason why we're only short the S&P as well, and that's because almost 50% of the indices is US tech anyway. So it makes perfect sense as to why we would have naturally a bearish bias on this one this afternoon. So just to confirm, we've got a long in the US 30 Dow Jones, but we are short in the NAS and the S&P 500. Based on the availability of both of these markets at the moment, the choice really is yours, but I would not take both trades. Okay, just want to repeat that. I would not be short both of these at the same time. It's poor management. If you really got it down, some of you guys have been around the block. You've been with me a lot longer. If I speak directly to you, then possibly you guys would be okay. If you haven't been around the block with me for a little while, or you haven't been a full-time member for a while, I would really hesitate and think twice about taking both at the same time. You're double leveraging. It's a good, I appreciate the enthusiasm, of course, but it really is about dialing in the process, getting used to how it all works. So that would be my professional opinion today. So US 30 Dow Jones long, S&P NAS 100 short. Okay. Some decent availability across the board. We just have to hope that the market really does get moving. Good afternoon to you, Mark. Yeah, no apology necessary, mate. That's fine. We've all got lives. I appreciate that. So I don't want to be getting into anything just yet. It's been a really big weekend. There's a lot going on at the moment. There's a lot of fear, a lot of uncertainty. So I think it would be good for us to take a step back, let the markets be, do what they're going to do. And then we can really get involved as we usually do on a Tuesday. That is generally a UTCF sort of process, but I'm thinking like that even more so now than before because of everything that's happening. Gold is actually looking fantastic at the moment, so I'm happy with that one. Don't think there's anything else to really consider. Obviously, we've got some risk going on with the Swiss, and the Japanese yen should be very similar to this as well at the moment. Yes, well, not quite as nice as that CAD Swiss. That's actually one hell of a move, that one. But the CAD yen, similar to it. Some of these trading assets are looking okay, like this CAD yen, for example. Nice big structural highs, great structural low, beautiful range, well established. Could really line us up for something nice this week, but we don't want to be getting excited and taking the trade on a Monday, because Monday is decision day for a lot. And it does dictate the direction of the market for at least another 72 hours, quite prominently as well. So we do want to be patient. We definitely want to be patient in these markets at the moment. And yeah, that's about it really, guys. Yeah, that's about it really. NZD USD is still ongoing at the moment. I didn't really want to bring this one up just because it's a bit of an embarrassment at the moment. I can't believe we're still in it. I mean, we're talking about mid-Feb we got into this one now, and it's still going. It's actually costed me so much in the swaps personally. It's almost not worth anything even at its current level. So I'm now really in the trade from like 59.50 going down to 58.70 to try and get that to get in the back pocket there. So what are you gonna do? Just got to stick with it, be a bit patient with it, a bit more. Hopefully this week is the week where we see it go. Let's have a quick flash of the DXY before I jump off here and get ready for this afternoon. So DXY currently trading at 98.54, doing really, really well at the moment. Nice big demand vacuum starting to take place in this one. I think so long as the US is, considering the military front, and so is everyone else. They're all exchanging their currency for dollars at the moment, guys. Make no mistake. Dollar is in demand. As soon as you see anything about easing tensions, I promise you this, you'll see that dollar index drop back down. I really do. This is directly correlated with war. Directly correlated. And you will see the demand get diminished as soon as we see easing of tensions. So keep your ear to the ground, really do pay attention to what's going on. Don't lose yourself to it, but just keep your ear to the ground. You see anything about easing tensions, Trump said that he wants to talk about, whatever, taking his foot off the reins with going to war and stuff like that, then yeah, let's consider some selling opportunities in the dollar. Because the great thing about a dollar bid, right? Once the dollar comes up and it gets really, really bid up, there's going to be a lot of money on the table for all of the bigger players to start removing and start rebalancing. So what we're going to do as a result of that, we'll probably take our foot off the gas a bit from buying dollar at the moment. But what we are going to do is we're going to sell the crap out of it on the other side. And that is what we're going to do. And that's how I made a lot of money back in the day selling the swaps for Russia. And it was a good strategy. It did make me question my moral compass. I must admit, but these things happen. You've got to be a professional, right? Otherwise, you're in the wrong job. So that's pretty much it there, guys. I think that's about it. I think that's everything I've got to offer today so far. So we've got a couple of decent opportunities on the horizon in the US markets. We've got clear direction. We've got a decent trading plan. We're looking at good risk-reward ratios across the board. We know what's up and coming this week. We know where we are with the situation with the US and how that's going to affect the markets. I think we're there. I think we're pretty much eyes open. Are there any questions? Anything I can do to help you guys out before I go today? All good, Braden? Yeah. All good, H&C? All good? Yeah, no worries. No problem at all, D. Yeah, Matthew, good man. All right then, team. Well, I will love you and leave you there then. Have a fantastic afternoon. I will be doors open. As always, open door policy here. Please feel free to fire in charts and ask me questions or whatever else throughout the day. And let's see what we can do with our US Open. We're currently at 2 p.m., which is a great time. We've got a half an hour to go before the bell rings this afternoon. We all have our plan. So let's get to it to see what we can do. Take care, team. Have a good one. I'll see you then. Bye-bye.